This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In tonight's video, I'll be going over the data sets. I'll lightly go over the earnings, but there are no earnings for Friday. And I will be doing a technical analysis for the SPY for January 30th, 2026. And with that said, let's go ahead and jump straight into the data. Now, I did not get to make a video on Wednesday, I apologize, but I will go over what happened during the FOMC. Now, there wasn't really a whole lot that Powell said. I watched the entire press conference and all the questions and everything, and unfortunately, there really wasn't a whole lot said at this conference at all. The Fed is pretty much in a stance where they just want to remain neutral. And that means that if conditions arise where they see the necessity to ease further, meaning to, do further rate cuts, then they have the ability to do so. But as long as there's um, weakening in some of the data that or not weakening, but stability within some of the data that has been weak. For example, the jobless claims, and we'll talk about that in a second. But the jobless claims was close to that 1.9, almost 2 million point for quite a while. Many people, including myself, and I still do think so. So I'm not going to swap stance on that yet. But it showed that there is a major issue in the labor market. Now, all of a sudden, we're seeing the continuing and current jobless claim or initial jobless claims pulling back down. So, was that just a bump in the data where we saw a small spot where the jobless claims were rising quite a bit? And that's pretty much what Powell's saying is that we're seeing some softening in some of this data or some stability within some of this data that has been coming in quite soft. Another one, factory orders. The orders have been pretty much abysmal for the last few months, but now all of a sudden they're slowly starting to pick back up again. So are we going to see consumers start to pick up as well? Are we going to see hiring start to pick up as well again? So that's why the Fed is really wanting to remain neutral. They're wanting to be in a stance where they're seeing, from the collateral side, they're seeing the SOFR not being used. They're seeing everything being correctly balanced. Um, and from the monetary stance side, they're seeing, not exactly the best data, but it's not the worst data either. Um, and they just need to wait. So really, that's pretty much everything Powell said. Um, that's not word for word, obviously, but that was really the entirety of the press conference. Now, getting into the data sets for Thursday, we had the jobless claims come in, and obviously the initial jobless claims or the continuing jobless claims are pulling down. And they've pulled down pretty much quite heavily too. This was actually very close to the 2 million mark. Really not that long ago. I want to say about a month and a half ago. We were looking closer to pulling up towards that 2 million mark on the jobless claims. And the initial jobless claims has been a little elevated, but still these two pictures haven't been adding up. Meaning the continuing jobless claims have been falling off much faster than initial jobless claims have been adding into that. So a lot of people are falling off of the jobless claims. Now, one thing we do know is that the current job positions right now are pretty much next to nothing, almost 0% hiring. And Powell even said that himself. There's pretty much 0% hiring, 0% firing. Um, which means that are we just seeing people leaving the workforce or are we seeing something else shifting? So that's something to just be open about for another few readings as we, wait for the data just like the Fed. Um, One thing to be aware of is that with the exports declining, that's going to pull down the GDP. And that's very likely why we saw the Atlanta Fed GDP now pulled down so heavily. However, with the imports still continuing to rise, that's considered as basically a net positive on the balance sheet for the GDP. So with this rising and with exports continuing to drop, that's going to be adding to the GDP quite heavily. The exports dropping, not so much. Obviously, exports dropping will actually take away from the GDP, but we've already been seeing the exports very, very low. So this isn't anything too alarming. If anything, the imports coming in less is probably the most alarming part because even though that does pull the GDP up, it's because it's read as a net positive in the books, it's very deceiving. So I think a lot of people are starting to look at that number a lot more than what they previously were. Now, the non-farm productivity was actually very good, and this is the quarter three, but this still doesn't align with the ADP jobless, or the weekly employment changes, with many other data sets we've been seeing out of quarter three. But again, quarter three was still the summer months rather than December. So when we get the final data sets for quarter four, then I do think that the non-farm productivity will be pulling down. But that was showing that weakness earlier in the year, and a lot of that was partially due to the stock market dropping very, very heavily in quarter two and quarter one. It started pulling back up in quarter two, but a lot of that, I don't want to say weakness, but a lot of that earlier weakness from the earlier quarters was definitely due to that. Now, let's see. Unit labor costs still down. Factory orders, as I mentioned earlier, those are going up very, very slightly. Um, I need to look into the factory orders more, so this isn't something I'll have done for Sunday's video very likely, but probably sometime next week when we circle back around to the orders again, is that I need to see at what percentage this is actually growth compared to just filling standard merchandise and stuff like that. So that's something I would want to see. Again, the Atlanta Fed GDP now came in quite low, pulled down to 4.2%, which obviously that's a major decrease from the 5.4%. So something happened that is spurring a 1% decline in the GDP now. Um 7-year note auction came in slightly higher as anticipated. Nothing really out of the norm there. Now, moving into tomorrow, we don't have a whole ton of data, but we do at the same time because President Trump will be doing a speech and also giving his nomination for the new Fed chair. I'm not sure what all she and everybody else has their bets on right now. Um, for me, I'll see who it is when we see who it is. So that's that. The market will react probably very bullish to whoever he picks. Um, as whoever he picks is going to be in the stance overall to ease monetary pressures from the Fed over the long scope of his tenure. So I think that's a bullish thing for the market overall. It's not like President Trump is going to be picking a Fed hawk or something, or someone as the next Fed chair. He's going to be picking someone who is very, very likely a lot more dovish and willing to, ease the balance sheet a bit in terms of that way. So overall, I do expect that the market to see that as a plus. Now, in the actual data side, we have the core PPI for December, um, and the standard PPI month over month at 8:30 a.m. I don't really have any take on this right now other than the forecast is expecting it to come up very slightly. I think with all the consumer readings and everything we've heard from November and December, I think that seeing a very, very slight increase in the PPI wouldn't be unreasonable. I don't think it'll pull up all the way to the 0.3% that it's showing. I think this is very, very likely going to be closer to a 0.1, maybe even a 0.2%. I really don't expect the 0.3, and I don't expect the month over month non-core PPI to move. I expect that to come in basically in line with the 0.2%. Chicago PMI, don't really have much to say about that one. Either with Bowman speaking. One thing I did want to mention is that I don't think I was able to speak about this yet, is that this 84.5 rating on the CB consumer confidence is extremely, extremely, extremely low. It is I'm not going to say one of the lowest readings ever, but it is an extremely concerning and low reading. As I've mentioned, this is soft data, and soft data is driven by opinions. But when the soft data and when the consumer confidence has been this low, we've always entered a recession shortly after. So take that with a grain of salt. That's the data. Now, going into the earnings. Now, for the major earnings today, we had Apple. Now, I believe Apple's actually doing good in their overnight, even with some of the selling that was happening in the after hours. Oh, they're down very, very slightly on the overnight session, so I'm not worried about that one bit. I know Tesla did very well with their earnings. Microsoft, not so much. I saw they were down, I want to say what, -7% at one point, and that Meta did very, very well. Overall, it's been a fairly bullish earnings week. Really the outlier was Microsoft. Um, but yeah, don't really have too much to say about that in the earnings front. I don't really expect anything out of the market tomorrow to move the major market. For example, if SoFi comes in weaker or something, it's really not going to move the market. Now, one thing to prepare for is for next week is that we do have Palantir on Monday after close. Now, the premium will be very high still, but with the selling we had in tech overall today, um, that might be an opportunity for, shares or calls if you're expecting an upside in, that earnings. But the IV won't be super, super high just yet. If we're having a push upward in this Friday session, then come Monday, the IV on those contracts are going to be much, much higher. And overall, come Monday, the IV will very likely be higher regardless. But yeah, we do have a lot of major earnings next week. I do think the market is pretty much ready for good earnings. I don't think that we're really at the narrative stance where bad earnings are going to tank the market too much right now. For example, we did see Microsoft have a pretty massive earnings, where they were again down, I want to say over 7% at one point. I don't really attribute Microsoft's, uh, you know, earnings selling off to be why the SPY and tech and everything sold off today. I attribute that mostly to the Bank of Japan and the unwinding of the yen carry trade. So, um, really, I think that the earnings this week have been fairly good. So,
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal Gex and Dex market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And getting into the technical analysis, we are going to make this fairly quick. Today we did have a bit of selling, and we did have again another upper Bollinger rejection, which is very, very frustrating. This is the third one, in what, 2 months, time span, something like that. But with today's selling, and with it pretty much almost not entirely being bought up so far, but a large portion of the weight has been bought up. Um, as of current, the overnight price is at 692. So even though we did sell off a little bit, we're still technically holding some bullish levels. One thing I want you to take a look at is the 5 month. And with the SPY closing at 694.04, the 5 month is currently at 693.38. So by all technical standards, the 5 month is actually going to be pulling upward tomorrow on the open. Even though we did have a fairly heavy selling day, on Thursday, which is for me, a very bullish sign. And another bullish signal out of that is that the 10 mont will still be pulling upward. So we're going to be seeing a bounce off of this 20 mont for the 10 mont. And the 20 mont, because of where we closed, will still be pulling upward as well. So that expands the upper Bollinger. The upper Bollinger, again, is very, very heavily tied to the 20 mont. Same with the lower Bollinger. And another very, very bullish signal that I see is that the ADL on the daily time frame is starting to pull up very, very heavily as well. Even again with that major selling happening today. Now, I am going to pull up a drawing 1 second because we had a bounce off of a very, very key level today. And almost to the cent, I have not moved this chart at all. You see that we reject this liquidity channel. And that's something we were really looking for this right shoulder on this major inverse head and shoulders. Um, while I was not really expecting it to have such a crazy sell down like it did, um, by all technicals, what I also see here is a completed cup. From that completed cup, we fully anticipated that there was going to be a selling structure. Now, remember, we said that either we were going to have the push upward into that upper Bollinger, or we were going to start seeing a bearish structure form at the top of this cup so that we can get the handle. Now, with the handle starting to be formed, it did go a little deeper than what I thought it would. But by all technical standards, we still have a handle on our cup. And as long as this remains a handle on this cup instead of turning into something larger, like potentially a head and shoulders, sorry, I'm just marking these out really quick, but potentially this could turn into a much larger bearish structure with that head and shoulders if we sell downward, build some support on top of this um, major liquidity channel, have a pull upward, and then basically pull back down into that channel, closing that head and shoulders liquidity outward. That would basically close out this entire range of liquidity to the short sellers, and then they would start selling down to those levels below, retail holdings for the most part. Um, So that's what I'm thinking about in terms of the bearish side. But from the bullish side, this looks very, 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 very good. I didn't buy the exact bottom on today, but I did start buying calls at the 687 range. I started buying TQQQ calls for next week and for March. Those are the I want to say 56 strike. I have to check my phone, but those I believe the 56 strike for both of those time frames. I really do want to catch this dip if this is to be a bullish dip, which so far I've I've given you my opinion of why I do think this is going to be a bullish dip. The last thing we basically need to see here is a smaller bullish structure starting to build, which technically we can be seeing here. We could be seeing a much smaller inverse head and shoulders start building. And with that, that would be the liquidity to create the bullish breakout of this handle. And with the upper Bollinger expanding to that 700 range, because again, the upper Bollinger right now is, I believe, at 660 or 696.69, if I remember correctly. Um, no, it's at 699. 69, that's what it was. 699.69. That means that tomorrow it will be over 700. So if we're going to be having that upper Bollinger mechanical move that we've been highly anticipating for a while now, then we will be expecting the push above that 700 plus range. So I'm bullish right now. Um, I still see a lot of signals to be bullish for. For example, we see within the HIG, and let me pull this up. Within the HIG, we saw a little bit of selling today, but again, it was not anything very major. The overnight is down very slightly. That doesn't matter a whole lot because the overnight shifts very drastically on HIG. The VVIX was still very elevated today. However, it was starting to pull down um, towards the close, which to me that's a good signal. That's showing a head and shoulders. And if we're going to be receiving the buying that I'm expecting us to see on the SPY, then we will be seeing the VVIX pulling down. Now, with the macro conditions currently being a little weird with the Bank of Japan really trying to time their selling into market buyers, um, we're having unwinding going on while we have a bullish market. So we are seeing some big money starting to hedge. Now, the main thing I'm watching again is the VVIX during this moment because you will have a lot of retail money entering the VIX that cannot touch the VVIX. Okay, this is the big money. This is the SPACs vehicles. This is the stuff where people are spending, hundreds of millions of dollars to set up a position. This is where it matters. We can continue seeing the VIX rising, moving into the upper Bollinger, getting an upper Bollinger all-time high push with the VIX still rising. This is based off of people buying um puts on the S&P. So that can definitely happen while big money is, buying the dip essentially. So that's really what I'm looking for. With it pulling up basically to that, I think it was about 111, almost 112 today, and then pulling down to the 101. For me, that's a very drastic shift. That's suggesting that it does want to pull down again. Um, these vol spikes usually don't tend to last very long. As you can see, they spike up, pull down, spike up, pull down, spike up, pull down. Usually you don't see them spike up and then continue spiking upward. Um, Even here, we see it pull down, spike upward, pull down. So I'm really expecting a lot of this volatility to drop off. I'm really seeing that playing out. Um, Another thing that's very important that I did want to talk about is with the SPY being around the 5 mile again, we did talk about how if the upper Bollinger was rejected, we would be looking for the 5 mile retest. Well, with the 5 mile, 10 mile, and 20 mile all being retested basically in that same session, If we see buying to the upside, that will be considered as a full and successful 5 mile retest, and that would allow the upper Bollinger move to basically happen without having to retest anything for support again. Um, Again, this looks like a very, very strong handle to this bullish cup, but this can turn into that somewhat scary head and shoulders, but that's something we will monitor. You will see rejections of the upper bowl or of not the upper Bollinger, but the 5 mile if we're going to see this continue pushing downward. So that's really what you need to look for at this next level is, are we going to see the 5 mile bought up and see continuation from that level, or are we going to see the 5 mile rejected and pushed downward? A few things that I have been looking at is semiconductors. And again, we do know that SOX was up at the upper Bollinger, a little bit of a rejection, but overall, this has still been in very, very bullish territory. Even with it selling in the after hours and the overnight, currently the overnight is at 356. It's still well above the 5 mile. The 5 mile is at 352.09. So this is still bullish. The ADL pulling up on that, very, very bullish. QQQ, I believe we have a very, very similar story going on. Yeah, very similar story going on with that as well. ADL pulling upward. So I am looking for the move to the upside. Um, I'm just, I am seeing a lot of signals that are telling us that this was just a dip and that very, very likely it will be bought up. So yeah, I'm going to end the video there. Now, one thing I do want to highlight on Bitcoin is that I've been talking about this liquidity zone that was very, very dangerous for a very long time now. Um, Basically around this range. Um, I want to say that was, back in December, whenever it was. And I said that either we were going to see this bought up into an upward cup, or we were going to see this turn into a inverse cup. We already have the inverse cup basically built. We just needed it fully built to the downside, which is again at that 74.4. So if we're going to see further selling within, the SPY and everything, very, very likely you're going to see continuation of the selling within Bitcoin. Um, if we see this range bounce, which there's a good likelihood it will, even if you're bearish on Bitcoin, there's a likelihood it will bounce because we just completed that inverse cup to the downside, which suggests that we do need to build some further liquidity in this range to build a handle and push downward further. So that's what I'm looking at for Bitcoin really. Um, Other than that, I'm going to end the video here. Thank you all for watching. Thank you all for um, subscribing, everything else. I appreciate all the support. Um, Other than that, I hope you all are doing well, and I will talk to you all in Sunday's video. Take care, everybody.